It's good to see you. Can we just start with your description of the current state of affairs and whether we've seen this before? Is it the converse of the jobless recovery of the Obama years, Randall? Now we have a job-full quasi-recession?
Well, yeah, I think everyone has to keep in mind that notwithstanding the athleticism of the Fed's recent moves, it takes time for interest rate changes to work their way through the economy. And we're seeing the effects now of moves that were taken in the spring. So all of this will take time to work through. So it's not surprising that you would see sort of a strong move by the Fed and still see inflation maybe coming in a little ahead of expectations immediately afterwards, because the effect of this move isn't going to be felt for a number of months.
Randall, it's been pointed out to me that if you're looking for the greatest lagging indicator, it might be employment. Is that why we're all sort of scratching our heads? Is it, in fact, are we in a slowdown already? The jobs, the unemployment rate will catch up with the state of affairs we're in right now, and we maybe could be in a recession already?
Yeah, I mean, we're clearly in a slowdown. It would be a little odd to say that we're already in a recession when you have such a strong job market. But I think, pinning the tail on the donkey of are we in a recession at this moment or not, what's important is that the economy is slowing down generally. The labor market will ultimately have to slow down as well in order to bring inflation under control. There's every reason to expect that will happen, given the robustness of the Fed's approach currently. And that's a feature, not a bug. To bring inflation under control, the economy has to slow down.
Do you think that the inflation problem right now is totally ingrained into the structure of the economy yet, like it was in the 70s? Or is it still one-offs like the reopening of the pandemic, supply chain, Putin, et cetera, et cetera?
So no, I don't think that inflation is ingrained in the economy. If you look back, I mean, it took, that was a decade of poor policy and unexpected economic shocks that resulted in the inflation/stagflation that we had during the 1970s. We aren't facing anything like that currently. But I don't think that the current inflation is principally driven by supply shocks either. The war in Ukraine, chip disruptions. I think it's principally been driven, and I think that's been clear since last fall. It's principally been driven by overstimulated demand. And while at the Fed, we misdiagnosed that at first, I think it was reasonable to believe at the beginning of last summer that this was principally a supply disruption driven inflation. It was clear by last fall that it wasn't. The Fed got off to a slow start as a consequence. But a demand driven inflation is exactly what the Fed can control. And the interest rate moves that they're making are exactly what will bring it under control. And I think we'll see the effectiveness of that policy relatively soon, by the fall.
Shepard Smith here. Thanks for watching CNBC on YouTube.